The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
The private sector lost 247,000 jobs. The public sector lost 10,200. And the private sector hasn't had growth since April of 2025. And I mean, that number is not going to be going up at all, especially with AI and everything. That number is going to keep going down.
Welcome to episode 74 of the Canadian Mortgage Show. Alex Pang here alongside Alex Shanks. Alex, how are you doing?
Pretty good, but is this the Canadian Mortgage Show or the Seattle Seahawks Super Bowl show?
Yes, it's the pregame show. This is the last episode before the Super Bowl. We're recording on a Friday, so it's been a long wait these last 2 weeks. So the time is nearing us. It's not quite there yet, but we got 2 more days.
Yeah, and who do you have for a jersey there? I can't see the number.
Mine is just a number 12.
Okay,
I'm just the fan.
Fan. Yep, nice.
Just the fan.
I got beast mode on here. Marshawn Lynch. We're gonna go beast mode on him.
100%. I actually do want one of those jerseys too, but I know myself and I don't want to get into debt. So I can easily do that. So
just buy a jersey every time. It's not needed.
Yeah. So, I mean, something happened to you yesterday. We were supposed to record yesterday, but what happened?
Yeah, I mean, we were meant to record last night. And as I was coming back from some kid stuff, I'm like, oh, the power is not on in my little village. And I'm like, hey, Alex, the power's not on right now. And so I said, I'll keep you updated. And yeah, power was off from like 6 p.m. till about 11 p.m. Where I live. It was due to a car accident. It does sound like people are okay. But yeah, pole got taken down. They had to put a pole up because it wasn't weather. But it's kind of funny. I mean, Alex always says that, hey, living on the island, yes, our home prices are lower, but you got to deal with a bunch of stuff. Can't get Amazon the same day. And then we get power outages. But the funny thing is, I haven't had a power outage in like 7 years, actually. We've been very lucky for all the places that we've lived. But it was actually pretty fun for the kids last night. They had a little dance party and they really enjoyed no power.
Yeah, I'm sure a lot of us were bombarded by electronics all the time, right? Like the overstimulation.
Yeah.
And as soon as we're forced to not be able to, it was like, oh, this is kind of nice. We have the candles on, flashlights everywhere. I'm like, oh, hey, let's play a board game with the family, something like that, or read a book or something like that. It forces us to unplug a little bit, like with our lifestyle and stuff.
We went and looked at the stars. The stars were, I mean, amazing. Obviously, because there was just no lights. Like it just looked. That's the one I miss working out in the bush or on the ocean. Because there is no lights around. Like when you look up at the stars, like it's just so bright. Where the one thing, if you probably go outside and look at it, hey, you can see the stars, but the city lights never turn off.
Yeah, it's for us. If you do want to see the stars, you have to go up to the mountains because I guess they call it light pollution.
Yep.
That drowns out all the what you see in the skies. So I mean, I haven't done that since in my 20s. So life gotten too busy and things are, being thrown at you on a day-to-day basis. But let's get the show started. We have a pretty packed schedule.
Yeah, let's jump into it. I mean, now this is one, and I've got a few people actually that have reached out on this. And the big banks we've always talked about, we show like, hey, what do the big banks have for a policy rate forecast? And right now, half of the 6 big banks see interest rates increasing, but going up by the end of 2026. Now, this chart came out like in, I think it was in the beginning of January. The hardest thing is like they're also pulling on data. Like we got the job reports in February and everyone was like, oh my God, our economy is doing amazing. And so on here, you got RBC saying that by the end of the year, we are going to be up almost at 1 full percent on a variable rate. Scotia is saying 0.75, and then National Bank is at 0.5%. I personally, I don't see this at the moment at all there, Alex. Like there's no data at all showing this. Again, if anything changes with inflation or something, well, hey, this could change. Bond yields are holding steady. We're going to talk about this here after job reports and everything. Like there's no data pushing it. The thing I could see, if we had cut rates further, this to me would make sense for 2027. Something like this chart for 2027. And again, it'd be interesting. We'd have to go back to all the other charts that we've put in here before. I mean, like Scotia for the longest time said that rates weren't going down. They were going to stay at like 3.5%. They were never dropping. And I mean, they were wrong there. But yeah, you got TD, CIBC, and BMO saying that rates are going to stay flat. And that's personally what I believe right now.
Yeah, I'm on the same token here, and let me just clarify for the viewers here. This forecast goes all the way out to the end of 2027.
Yeah.
Yes, yeah. So, but I mean, I have a hard time believing or getting into the minds of National Bank, Scotia, and RBC saying that the economy is going to improve. I'm like, we've talked about this. There are no signs to say that economy is improving. The higher likelihood is that there'll be a rate cut versus a rate hike. And you know what? I do believe it's, like it's going to be flat for a little while. Now, we had this bet last week or a couple of weeks ago about if we do see a cut, when it will be. The next little bit here is kind of pouring cold water on that. So it just came up this morning, and I thought, at least I'm humble enough to say if I'm wrong, yes, I admit it. Okay, so here is some evidence to show maybe I'm wrong or maybe my argument is not going to work out. So the Bank of Canada Governor, Tiff Macklem, he did a speech yesterday on Thursday. He warned that cutting interest rates while the economy is adapting to structural changes risks stoking future inflation. I mean, it doesn't take a genius to say that. Both of us know that. And I quote, "Monetary policy should not try to compensate for lost supply. Lowering interest rates in the face of weak economic activity risks stoking future inflation if the weakness is due to lower productive capacity rather than a cyclical downturn in demand." So, and he goes on saying that, like, maybe rates should not try to manipulate how the structural change needs to happen. It's almost like it needs to naturally fix itself. Now, we have a new upcoming U.S. federal chair. Jerome Powell is leaving, and the nominee is Kevin Warsh. Now, per Desjardins Securities, his view is almost completely opposite to Tiff Macklem. It says the freshly nominated Fed chair believes that monetary policy can help accelerate the structural transition underway, with lower interest rates supporting business spending on productivity-enhancing investments. Only time will tell which central banker is correct. Now, Alex, which central banker do you believe in this case?
I mean,
Tiff Macklem or Kevin Warsh? What do you think?
I mean, I would say neither of them fully know what's going to happen. And again, like today, the data says this. Next week, maybe tariffs go away fully. Well, then, hey, could the economy open up? Our GDP is down right now. Like again, we're getting all the whispers of Canada's in a recession. I mean, how long has this been, Alex? Like 5 years of saying, hey, we're in a recession, but the government keeps saying, no, we're not in a recession. Now, obviously, this Fed chair is coming into power because of big Donald Trump here. And I mean, everything that Donald Trump is doing needs rates to be lower. His big, beautiful budget that he did. And so obviously, the way that stuff is dealt with in the US and their Fed is quite a bit different than the Bank of Canada. I mean, they're meant to be separate entities. But the pressure for this Kevin Warsh guy is going to be, hey, you lower interest rates or I'm firing you. That's pretty much what happened to Jerome Powell. And so I could see, like, to me, the hardest thing here is like, obviously we know that Vancouver and Toronto housing is down, and we're going to get into it. Like it's down bad, but there's other areas of Canada that is booming. And so like the problem is if we cut interest rates, well, are we going to put a flame to the fire on those areas? Obviously it could help other ones. It's the businesses that really need help right now. And that's where, to me, like maybe we need to adjust a bucket for the Bank of Canada. Be like, hey, you know what? We're going to leave interest rates on homes where they're at, but hey, we're going to bring some lower spending for businesses. Like that's where I see something that could actually benefit our economy. And again, maybe it doesn't have to even be interest rates. Maybe it's taxes. Maybe they're able to reduce the taxes. We've talked about this before, but the problem is our government is spending so much money and it needs our tax dollars to even fund the spending it's doing.
Oh yeah, and anytime there's a tax break, they're going to make it up some other way.
Yeah.
They're going to introduce some sort of measure, carbon tax, whatever, increase property taxes. Now I'm talking about different levels of government, but is robbing Peter to pay Paul
Yeah.
kind of thing. It's historically happened. Like they haven't said, "Oh, we just need to cut government spending and we're okay taking lower revenue." It never really happens that way. So yeah, I mean time will tell whether Tiff Macklem is right. I mean, he said different things last week about the whole, all the uncertainty with the U.S.
Yeah.
Like making their forecast really vulnerable. So, I mean, and he says this today. Maybe he's walking it back, but the data will show that they may be forced to do something to help. If this whole structural transition is not playing out and then we see more job loss, more industries being suffered.
And I mean, the hardest thing, like we're going into like some of these job losses again are not due to the economy. I mean, it is because people are they're using AI and stuff and they're cutting workforces. Again, the one nice thing is we obviously have data from 2021 and 2022 when we saw inflation creeping up and then the interest rates skyrocketed. We all knew that rates were going to go up. Nobody foresaw going from 1.5% to 6.5%. That's the big thing. Where now we can watch some of that because, hey, if inflation is going up, we're not going to say this is transitory. This is inflation that's getting sticky. And even the bonds, we can watch what's going on the bond yields to figure out, hey, you know what? For a bit there in December, we went up above 3% on the 5-year bond yield. If that kept going, I would have been like, this chart right here is completely correct, where we've gone back down to like 2.9-ish, 2.889, and we're just kind of leveling off there. And so those are the data points that I'm watching. If I see anything change there, I'm going to be calling every client saying, hey, you're in a variable rate. We want to look at what does it look like to lock in right now. And that's where it's like, if I had a hot meter to cold and hot, I'd be in the middle right now. That's where I would be sitting at the moment.
Yeah, I've had several conversations this past week, the same thing, where clients are asking, hey, does it make sense to lock in now? And basically the temperature of what I'm telling people is what we talk about on the pod. Hey, I'm sorry to give you a long-winded answer, but this is what determines interest rates. Here are the headwinds with the economy and what we talk about. More news is negative than there are positive. There is no signs there is any positive news right now. And based on this, if there's ever a move, it's more likely to be a cut than a hike. And if anything, it might just stay even. So for now, I've been telling people who are on variable, stay the course, but be ready to do something. And I'll keep an eye. I mean, we've been keeping an eye. We've been talking about this for a good part of a year now, or ever since the beginning of this pod. But yeah, that's
I have
what I've been telling clients.
I have had some people lock in. To me, it's like, hey, if you can get a number underneath 3.8, if you can lock in for that, I mean, I think that's a great number. To me, anything under that is like, hey, yes, maybe could rates go down? Like, again, mine and Alex's, he sees a rate cut. I potentially don't, but hey, could it happen by 0.25? Potentially. Like if you had like, say, a variable rate, you're around 3.7 to like 3.65, maybe even a little bit lower. But again, like I said, if you could lock into 3.8%, and even if rates were to drop, Alex and I differ a little bit. I don't see any rate cuts. He sees maybe a 0.25. That difference there, obviously, the higher your mortgage is, it's going to be a bigger change. But what are you risking and what are you rewarding? Are you going to reward yourself $5,000 over 3 years, or are you risking yourself $10,000 if rates were to increase? Like that's what I personally like to look at. And again, the economy right now is not showing that, hey, we're not going down by 1%, 2%. Like rates are not going down to 2.5%. And so that's where it comes down to, where are you comfortable? Again, hey, you've lost maybe $5,000, but hey, you don't have to look at the news every single day. I mean, we love that people are listening to this podcast and they get the data from us, but hey, maybe you can just shut all that stuff off because you're like, hey, I got a 5-year fix and I'm at 3.8. I don't have to think about anything for the next 5 years. Like there's a piece that comes with that.
Yeah, we've always long said that if you can get it fixed with a 3 handle in it, even if it's a 399, that's actually a pretty good. Um, that's worth considering. So, I mean, there's nothing wrong with that. Right now, we're seeing fixed rates, either a 3 or 5 year is above three, kind of like in the low fours, like, 4.25. It can go up to 4.5 in some instances, but yeah, 4.1 to 4.25 ish. We feel like there's maybe a little bit more room to go. And but you know what? If you do want to lock in, call your lender, see what they're offering. Doesn't mean you need to commit it. Just see what they have. And if they have something in the threes, that's strongly considering.
Yeah,
Like, let's, if you want to have a conversation with us and talk about your situation, we'd be glad to take that call.
yeah, and that's. I mean, I have
All
been.
right. So do you want to talk?
I was going to say, Alex, I have also been seeing that because bond yields have leveled off. Like some lenders give us rate exemptions, and I mean, we're getting lots of like 3 year fixed at 3.89 and everything. And so again, that benefit of variable, but it's going to depend. I have clients that are like, hey, Alex, I might sell in 2 years. We 100% are going variable. Like we have to be in that to protect yourself from a penalty. And so again, it's so hard. Everything with mortgages and finances, it's not black and white. It's not like, hey, you have to do this one or this one. It's like, hey, what are you doing? Okay, this one's better for you. And that's why you need to make sure someone's breaking down those options for you.
Yeah, absolutely.
So what I did talk about is obviously like when this announcement, like this chart came out here, this was when a lot of the banks were also going on the massive employment raise that we saw in December because of all the part-time jobs and everything. Well, all those part-time jobs are gone. 97,000 got lost that way, which we knew was going to be coming. And so like in the end, they're saying Canada lost 25,000 jobs in January. Unemployment rate drops to 6.5%. It was 6.8 before. Again, we really didn't add any jobs, but the reason why it's actually less is because less people are looking for work. Now, is that because December people were on holidays, January, like, are they just not looking right now? Or again, it's not because they got jobs. Now, the private sector lost 247,000 jobs. The public sector lost 10,200. And the private sector hasn't had growth since April of 2025. And I mean, that number is not going to be going up at all, especially with AI and everything. That number is going to keep going down.
Yeah, even Tiff Macklem said in his speech earlier that we are starting to see signs that AI is slowly taking over a lot of entry level
Yep.
jobs. And this is going to be the trend, folks, like the slow erosion of starter roles. And yeah, I mean, we don't see this reversing. I mean, it's almost like forcing us as a society to adapt,
The thing
to
is, I
adapt to
see
new
Alex is
roles.
this is like the next 5 years is going to be crazy. Stuff's going to happen, and then people are going to be sick of it. Like we already can see how people are so sick of the AI videos and everything, and that's where like for one, I've seen and even mortgage brokers they've been posting like AI videos. They've taken a video of themselves and they're doing it, and yes, maybe it almost looks real, but it's not, and people can tell that. And that's why, like, for one, Alex and I love to do this because, like, this is the real us. Like we are not computers. This is us actually talking, and that's what people want. They don't want to hear from a computer.
Absolutely, 100%. So we kind of shift gears here into the real estate stats here. Out here in the West Coast, we're starting with Vancouver. Real estate activity in the Vancouver area got off to a slow start this year, as residential sales are down 28.7% from January of last year. Now, the Real Estate Board of Greater Vancouver says the number of properties that changed hands also down 30.9% below the 10-year average. So that's kind of a sign of the times here. Over to Toronto, per Treb, Toronto's housing market started 2026 on a weaker footing like Vancouver. January home sales down 19.3% year over year. Now, the average selling price in the GTA is actually under a million for the first time in a long time, fell 6.5% to 973,000. So, for those of you who are looking to buy, good on you. You've been waiting for affordability. Sellers, not so much. It's not the greatest time, but I'm getting a lot more people who are looking to buy, and I've been telling them like, hey, Not great for sellers, but great time to buy because right now the world is your oyster. There is so much supply out there. If, like I have a client looking for a property, like a condo, uh, for 550. It's a one bedroom condo in the Greater Vancouver. For the rest of Canada, you guys can laugh because 500 can get you a lot more. But in the GTA, Lower Mainland, 550 is probably a one bedroom condo. And I even told them, like, you know what? Based on this market, 550 is your edge of the cliff number, and after your down payment, you'll have nothing left.
Yeah.
But in this market, you can get that 550 property, maybe 525, maybe 500, depending on how desperate the seller is and stuff like that. So you don't have to necessarily look in the 500 to 525 number. You could look at 550 and then try to land, somewhere lower than that, because you have definitely the leverage in this market.
In Vancouver, where I'm from.
Yeah, Vancouver and Toronto.
We're going over asking and everything, and it's just like, come on, this has been my fear, especially where I'm at. Of like, if we have lower rates, like it just lights a fire, and that's where again it's going to depend. And I mean, Vancouver Island, like a lot of people have realized, like what is actually on here. And I mean, we have mountains, we have biking, we have surfing, we have golf. Like there's every single thing that someone wants to do. Right on Vancouver Island. And so we're now getting a lot of people coming from Vancouver. Oh, I'm selling my $3 million house and I can buy $1 million house here. Boom, perfect. I'll bid 1.2 on that because it's cheaper than what I'm paying right now. Toronto going down and everything. Now, the big thing is mortgage delinquencies in Toronto are now, it says absolutely ripping compared to everyone else. And I fully see this. Like Toronto to me is like, it's the Wild West. It's scary out there. And if we were to talk about mortgage fraud and people that really shouldn't qualify, it is going to be the Ontario area. Like there in Vancouver will be the worst that way, but Toronto specifically and the areas around it, like 100% the worst. I remember anytime I get calls from people over there, they're like, hey, I have 5 pre-sales coming up. And it's like, I have 100K in income. It's like, you don't even qualify for the mortgage that you have. Oh, well, I can get my friend. And it's like, I'm not part of this with you. This is like, you need to sell stuff. You need to move on. And there's a lot of people that have believed that rates were going to go lower, lower, lower. And that prices were going to start going back up. And they've been holding on to things that are now worth less than what they actually can afford. And so it makes sense there. Our delinquencies are still like, again, well below. Like we go back here, we're still even below, what is this? Like we're now just hitting numbers of like 2022-ish there. Like we're in low numbers that way. And again, if we compare us to the US, like the US sit on average of 4%. We're not even above 0.5%.
Yeah, like the way Canada works is, correct me if I'm wrong. I believe in the U.S. it's a non-recourse loan where if somebody forecloses, lenders can't go after a borrower's personal assets or anything else, just the house. Whereas in Canada, it's different where they foreclose on you. They can go after everything, like your bank accounts, your other assets, everything personally. And whereas the States, it's not the same.
I think every state is different. Every state in the U.S. is different, and that's like the only one so all mortgages in Canada are recourse mortgages. What Alex saying, that the bank the lender gets access to everything else. They're coming after you. I mean, you can claim bankruptcy, but you lose all your assets. The only one that is not a non-recourse is a reverse mortgage, which is the most hilarious thing because every older person thinks, I do a reverse mortgage, the bank gets my house. If your home was worth $1 million and you took $500,000 out on a reverse mortgage, and home prices dropped by 50%, and your home is now only worth $500,000, but hey, you maybe had that reverse mortgage for 2 or 3 years, you would owe money. You maybe owe $520 or something. All they can come after you for is what the home is worth. They cannot come after you for anything else. You could have $1 million sitting in your bank account, but like, well, my home is only worth $500,000. And so again, that is why Canada's been more of a country that's not going to go bankrupt. Canadians do whatever they can to pay their mortgages and stuff. And I mean, hey, maybe you have to get a renter in, maybe you have to get a second, third job. Where in the US, people are like, I'm just going to walk away.
Yeah. And then we've always long said that Canadians, we love real estate. And so we will do we will do jump through so many hoops, whatever, hell or high water, pay our mortgages. Now, it's a different story. You've seen the graphs here that cars will be repossessed, your credit cards will be written off, but they will do anything they can to. That will be the last thing that they fall delinquent on.
Yeah.
But it's interesting. You see here on the chart side that Toronto has spiked more than the rest of the country.
Totally.
For that very reason, like you said, the mortgage fraud. We all know which city that is, Brampton. Happens a little bit here in Greater Vancouver, but no city is immune to it. But yeah, this is starting to see. Now, CMHC is estimating that Canada needs to build roughly 500,000 housing units per year to meet the demand. Remember that the Build Canada homes, Alex. What Mark Carney said.
500,000 homes.
We're gonna build 500,000 homes a year. And what's the latest update here? Anna Baleo, if I pronounced her name right, the CEO of Build Canada Homes. How many homes have been built so far, Alex?
I can't even, I wouldn't even want to say, if I was that person, I would just say, hey, you know what? We're working on it. I don't have the numbers in front of me, but they said we've built 9 units so far. Like, oh my God.
Like 900 or 9,000?
9, single digit.
9, just 9.
9.
Just, oh my gosh. Like, what the hell is going on here? So yeah, this is what a, when they make announcements like this, all these MOUs that's been flying about, it's like, it sounds great. It's lip service, but I'll believe it when I see it kind of thing. So this is what a gong show here.
It's pretty wild.
Now, we're looking at, we talked about house flipping. That was the thing when housing was crazy. You see these home and HGTV shows talking about, like, hey, you flip it, make it for a profit and all that stuff. Or flip it and reno it, or the BRRRR method and stuff. Yeah. So home flipping activity in Metro Vancouver has crashed to record lows. Surprise, surprise, representing less than 2% of all sales. Yeah. So if you see this graph here, according to the real estate board, the government introduced the flipping tax as of April 2024. Yeah. And you know what? This is kind of like no surprise because there's no money in it anymore. Yeah.
And that's, it's again, like I'd say the anti-flipping had some, and it's more businesses that were like, even builders like, hey, you know what, I'm going to build homes, and yes, I might live in it and then I'm going to sell it. Like they took away that. Obviously it's been the economy as well, of why people aren't, but like you can still make money doing a flip correctly. It's just like, hey, you can't just buy it and paint it and say, hey, it's worth $100,000 more. It's like, hey, you either actually need to add like a rental suite to it, maybe make it bigger. Like that is where it's actually come down to now. But again, they've made it very hard. Hey, in BC, you got the capital gains tax. If you sell within 1 year, you're going to pay capital gains. Hey, if you sell within 2 years, on that, you're going to have to pay the anti-flipping tax. And so like, it just limited people of what they wanted to do, because they're like, well, why would I do this when I'm just going to get taxed to death by the government?
Yeah. They, if anything, I do agree with this flipping tax. Like I rarely agree with taxes, but this one is kind of like trying to prevent people from flipping. And plus, you know what? It's working itself out anyway because the numbers don't make sense. So people aren't doing it now. Now, the same thing with Ontario, why it's falling, prices are falling. A lot of reasons. The death of real estate investment as a means to generate wealth. And we've long tried to talk about that, about it should not be a case where you are buying a pre-sale, instead of investing it in a business, you put it in a pre-sale and flip it in like a year or two, pocketing 150, 200 grand more. Those are no longer the case. So like flipping, development, multifamily, landlording, they're all gone because the price lift of the math doesn't make sense, like we just talked about. And here's another graph here in Ontario here that kind of supports what we just saying too. Despite HGT style narratives, house flippers were never a dominant force in Canada's market, maybe more so in the States than here. The shares of homes resold within 6 months has fallen to decade lows as market cools. So this is kind of a symptom of what we're already seeing already.
Now this is something cool, and I'm interested to see it and see what's going to happen here. But Nova Scotia is launching a pilot program that's going to cut the minimum down payment requirements for first-time home buyers becoming the first province in Canada to do so. A 4-year pilot that will lower the usual 5% down to 2% for first-time home buyers. Now, we have to remember the minimum down payment it's not just 5%. It's, hey, up to 500,000, it's 5%. When you go above that, it becomes 10%. And this is where I would be interested to know, what is that number actually going to look like? Is it, hey, we're only doing homes up to 500,000, which, hey, in Nova Scotia, you can find a lot of homes for under 500,000. And now the provincial government will guarantee the mortgage. It's going to be delivered through participating credit unions. If a buyer defaults and the home is sold for less than outstanding mortgage balance, the province will make up 90% of the lender's shortfall. So again, it's going to help lenders want to get on board for it. To qualify for this new programs, your income must be 200,000 or less, pass the Canada Mortgage and Housing Corp stress test, have a credit score of at least 630. People who haven't owned a home for the last 4 years, and so that's the definition of a first-time home buyer. And interest rates are capped at prime plus 2%. And this is where it's like, well, what if the credit unions are only going to give it to you at prime plus 2%? Well, it may not even be beneficial. It might be better just to say, hey, you should just rent and save this money up. And so, like, going to see what that looks like. No need for insurance on a mortgage where the down payment is less than 20%, offering up more savings. Like, that is very interesting. I don't fully know how they're going to get around that. Unless the government, unless the province is guaranteeing that 20%, which that to me would be a little, I don't know if I'd want to do that myself. And in Halifax and municipality of East Hants, buyers can purchase properties worth up to 570,000. The cap is 500,000 for the rest of the province. And so it's something interesting. I don't know, like, again, I would want to know, like, we used to have the first time home buyers incentive all across Canada to help with the down payment. Now, everyone was confused by that program, thinking that the government gave you a down payment. All it did was it matched your down payment, and it was solely to reduce your monthly cost, because obviously the more you put down, the less your mortgage insurance is and the less is your monthly payment, but it didn't give you a down payment. Also, when you sold, the government got part of those profits. And so I'd be interested to know, is this program going to be that same thing? Does the government of Nova Scotia, are they going to get some of these profits if people do sell as well?
Yeah, it looks like here, based on the tidbits here, that they'll only make up the shortfall.
Mm-hmm.
So, my first thought was, you can't go less than 5% down for CMHC stuff, but they are replacing CMHC, and government will be its own insurer.
Yeah.
But they're not charging borrowers for the default, the insurance premium. So and of course they can't go through the federal banks,
Yeah.
like the BMOs, RBCs, TDs, because can't do it. So it has to be the provincial credit unions, whatever they may be in Nova Scotia.
Yeah.
So this is interesting. I mean, like, do you think we'd ever see something like this in BC and Ontario?
No, because our home prices are too high. I don't think, like, the risk level on that, where here they're probably like, hey, you know what? The risk on this at 500,000, like, it starts to make more sense. I think, like, what would really be cool is the way that they do in Australia is your parents' family can use their house as equity. Again, we can do that in Canada if you actually take it out of the property, but in Australia, they can just do a guarantee. You can say, hey, my parents' home is worth $1 million. We're going to guarantee 20% of that. It doesn't actually get sucked out. You don't have to pay any money on it, but that's how they use it to say, hey, all right, you bought $1 million house, but hey, you only have a mortgage of 800,000. But they actually don't use any of it, and the government allows you to do that. And so that's where I feel like if they could do some of that stuff, that would be much cooler.
Yeah, the only thing we hear about, what similar thing in Canada, what we describe is called inter alia. The only time we see inter alia in Canada is for private lending,
private or commercial.
The banks, private or commercial. The banks, the B lenders, we don't see that in residential unless you're going private. But that'd be interesting. Now, I definitely see how it's good for Nova Scotia because their market is smaller, and we'll see how it works. I can see with BC and Ontario, if we took up something like this is almost like putting butane on a campfire. It's just like,
yeah.
like, oh. Now, of course, you need to qualify now that you're borrowing more, and I don't know, like this would be a much bigger pie for CMHC or even the federal government to guarantee. So I think this would be just a provincial to provincial kind of thing. But it's interesting. I would love to
I,
see how it goes
I
and
think
see
it's
what the
worth it. It's
results of it
something
is.
that something that's trying. I mean, it could work in Alberta. It could work in like other smaller provinces. And hey, maybe people are going to move there because they're like, hey, I can actually buy a house. And so like this could be incentive for Nova Scotia to bring more work people there. Like I see pros to it. It's just over in BC and Toronto, I see a lot of cons because people would do it and default very quickly, I think.
Yeah, we have higher home prices, um, you know, more drastic upturns and up cycles and down cycles in Ontario and BC. So, we are shifting gears here. We're going to talk a bit about some regulatory stuff here. BMO got fined by the Consumer Agency of Canada, or FCAC. They got fined $4 million for overcharging customers on discounted plans. Now, it says here that 101,000 customers were affected between 2010 and 2024, and that the bank has issued refunds totaling more than $3 million. Now, the bank has donated a further 600,000 for amounts that couldn't be refunded, and this 4 million penalty reflects the degree of BMO's negligence in preventing and detecting the error, despite receiving more than 500 customer complaints about the monthly plan fees charged.
They knew what they were doing, and they're just like, oh well, let's see how long. And again, like all this shows is that hey, BMO doesn't care. They probably made more money on this, and they're like, paying $4 million, I'm fine with doing this. Like, I would love to sit in like a big board meeting with like a bank and stuff, and they're probably like, they know the stuff that's going on. They're probably like, what is our risk reward here? How much money could we make if no one says anything, and what is our risk of doing it? And to them, it's like $4 million. You know what? I'm willing to risk that. And now this is again we go into Ontario with more stuff, and Rico has frozen the accounts of 4 Save Max brokerages in Mississauga. It found that 2.7 million was dispersed unlawfully from the trust accounts. The money was used outside of the terms of the trust, including loan payments, property management fees, taxes, credit card balances, and vendor services. And is also issued suspension orders. And I mean, this is just showing like the hard times that is out here. Is obviously like some of these brokerages are probably like, we have no money, we haven't made anything because there's not many sales, and hey, we got to start pulling from stuff to cover other expenses. And in their head, they're like, well, I'm going to pay it back. I'm going to pay it back. Don't worry. But that's just not how it works. You shouldn't, if you don't have the money, like we tell people, hey, don't go on a vacation with your credit card unless you have the money in your savings account.
Yeah, 100%. I mean, like it's one of those things where things can happen slowly and then quickly, just like any bankruptcy. Like this money is never theirs in the first place.
Nope.
They like it should not have been even touched at all.
Yeah.
But you know what? When I could see it happening, I'm not justifying it, but I could see it happening. And yeah, this is not right, and it's good that's happened there.
Yeah.
Now, I've long said we need stiffer white-collar crimes in Canada. Well, this is the first sign that there's actually jail time here. Now, does the jail time match the crime? We can debate about that. But Fortress Real Developments, there's a big private lender that defrauded, like $300 million worth of investor funds here.
Yep.
The co-founders were sentenced to 5 years in prison, and they had to pay $12.2 million each in restitution. So, I mean, the fact that, we all know that white collar crime pays in Canada. So the fact that they faced jail time, it just shows how egregious this crime was. Yeah. So the criminal case focused on 2 specific projects, the Collier Center in Barrie, Ontario, and a proposed 45-story tower in Winnipeg called Sky City. Now, Justice Moore, he found that the 2 Fortress founders had deceived investors with respect to the amount of security that we're getting in its syndicated mortgage loans. So syndicated mortgage loans means multiple people on the name, and you are essentially a conglomerate as the lender. Like you are the RBC, you are the BMO, you're the TD, whatever. So that's what syndication means. And almost 800 investors were defrauded for $300 million.
And hey, they
So
paid $12.2 million, Alex. Like that's like, and I mean, obviously, hey, they didn't get $300 million. Like they probably paid some people money, but still, like it's just again, and like this is where we're going to talk about the system in Canada. Like it took 5 years for this fraud trial. None of their assets got frozen during this time whatsoever. So all the money gets moved offshore and housing, like everything transferred to relatives. Like it's here. Like, I mean, I don't want to bring up like let's just talk about the trucker rally back in the day. I mean, their assets for those people got frozen instantly. Like not even before anything. I agree with what some of the stuff they did? No, but I mean, it's just showing here these people defrauded 300 million worth of funds and they got to fight it because they had money. If you have money in Canada and the US, hey, you can fight anything. But hey, they should have frozen their assets instantly and been like, hey, you know what? We're going to freeze this, prove to us, give us some information. Maybe we'll unfreeze some of it. But like the unjust of like the rich in Canada is just bonkers. They can kind of get away with whatever they want.
yeah, in the States, if this were to happen, their accounts would have been frozen right from the get-go.
Yeah.
Now, and even in this case, 5 years in prison, it'll probably be only 2 years with good behavior.
Yeah.
So, and you're right, $12 million each. I mean, what happens to the other 275 million that defrauded? It's all gone.
Yeah.
It's all in their offshore accounts or whatever. And um, like, yeah, this is a big thing, but at the same time, we still need to stiffen what our white collar crime in Canada.
Yeah.
Um,
Yeah, so I mean, yeah, it's a win
so
that hey, win compared to everything else. Like, hey, there is jail time here, which is a great that way. But again, their jail time is going to be different. They're not going to a normal just jail cell with everyone. They're going to go to a white collar. Like it's not. They're going to have TVs. Like it's going to be there. It's going to be a vacation to them. They're just going to be like, oh, we're going to hang out for a couple years. We'll still get to call our buddies and make business deals at the same time.
yeah, and those 800 investors, they're not going to see a penny of their money back.
Yep.
The EV sales mandate has been scrapped.
Yep.
So Carney unveiled a 7.5 billion plan to save our auto industry.
Yep.
We can debate about that. There's a 5-pillar strategy that scraps the old EV sales mandate for 2035, saying that what was the mandate? What 60% of EVs
Meant to be by like
needed to be sold?
Yeah.
Yeah, I'm like, this is not realistic. The way our country is, and like the structure and our weather. Now, 3 billion of it is going to go to manufacturing, and the EV rebates have returned. So 2.3 billion has been set aside for rebates up to $5,000 for EVs below 50,000. So I don't think that qualifies as a Tesla then, right? How much are Model 3s? Can you get a Model?
Well, I mean, Model 3s
3
are
for under 50?
they're getting discontinued, aren't they? Like Tesla's discontinuing
Oh, I
a
don't
bunch
know.
of their I think they're discontinuing those, and I mean that's me and my wife, we bought an electric. Well, we leased an electric car in 2021, and we got $17,000. That was the rebate we got. Like it actually made sense, and it was just below the $50,000 threshold, and it fully made sense because it's like, well, these savings are going to offset the cost of fuel and everything. This number again, like we're trying to fix something. Like, hey, we're going to try and say that we're like saving the environment with these EVs and everything. This is not going to do anything. It's been tried in the past. They did these rebates, did a bunch of people that wanted the electric just because there was money savings. That's why they were buying it, was to save money, not to do with saving the environment. And so like I just to me we're trying something that's already been tried. This isn't a new thing.
Yeah. If anything, too, yeah. I mean, I'm starting to see too, like there's been EV fatigue, and the whole real thing about anxiety and having to replace the battery after how long, because it's almost like it's essentially a battery, like your cell phone. After 5 years the battery's shot, and then you either need to get a new phone or replace the battery, which it would cost money and stuff. Now, I forgot to mention here that another 1.5 billion is being allocated for new charging stations. That I agree with,
I mean,
because we need to build out our infrastructure. And at the same time, when you have more demand on power, we're going to need to like invest in
power grid.
New, power grid, hydroelectric dams. However, I mean, we know that wind is one of those lost things where it's not worth it. But yeah, we need this. This is kind of a bigger thing. Um, yeah.
Yeah, and then I mean, this is so Melanie Joy on GM cutting shift 3 at Oshawa plant, saying that she had a meeting yesterday with the people from GM, and I told them that we would be getting our money back. And meanwhile, if GM doesn't want to continue to invest more in Canada, we will invest more in other players. Again, they've already given them the money. They're not gonna give any money back. Like, it's gonna be like, oh well, sorry, we tried to make it. The tariffs came in, and hey, we're not giving any money back. Like, this is silly. It should have been like, hey, you know what? Contracts need to be signed. But this is I don't see them giving any money back. Maybe they'll be like, hey, we'll take half of that $3 billion you're going to give to us, and they're going to give them more money, and then they're going to be like, oh, you know what? We're not really doing EV. Like, that's what I see that's going to come from this, Alex. In 3 years, we're going to say GM scraps EV models.
You know, for once, the government's actually trying to do something right for once. It's almost like they're trying to save face. Whether they actually get their money back, who knows? I honestly doubt it. But hey, the fact that they're actually going after them has been a good thing.
Yeah.
Now, so another tidbit here is the town of Olds is announced. I guess that's a town in Alberta.
Yeah.
It announced Tuesday that Synapse Data Center plans to invest $10 billion over 2 years, building a 1 gigawatt data center in the town.
Yeah.
So, we've been hearing some good things about Alberta and investment and stuff. And here's the latest good thing here is this Alberta town has chosen to be Canada's largest data center. So I guess with the shift of AI, there may be more investment in that sector, which is a good thing there.
Yeah. And I mean, but again, is that going to do well for like investment properties and everything? I don't know. Are people going to want to live near a massive data center? And so it's going to be interesting that way. Obviously, this is where we talk about like, hey, if you're looking to get in the trades, this will be a good time to move to Alberta to get into trades jobs. This is another one. Dow is moving ahead with the $10 billion petrochemical project in Alberta after delays. This thing has been going on for like 15 years. So like, I mean, it's great that they're talking about it. They aim for a 2029 startup. It's again, I won't believe it until it actually happens. The project is most prominent effort to attract major investment into Alberta's petrochemical sector, adding valuable to raw resources while underscoring corporate efforts toward decarbonization. Like, they already have petrochemical like just outside of Edmonton and everything, and they've said that they were going to upgrade it. But like I said, it's been 15 years in the talks and it just hasn't happened yet.
Yeah, I mean, we mentioned about a week ago. Dow was laying off a bunch of employees because of that. So I guess they've diverted to try to invest in Alberta, which is a good thing. Again, all announcements are great until they actually break ground. We're running a little long on the show, and Alex needs to go. So let's wrap up this episode here. Alex, what do you got going on this weekend?
It's just going to be football, man. It's Sunday Super Bowl. I'm excited for that. Hopefully the weather stays nice. Might go for a bike ride here tomorrow, and we'll see that way. What about yourself?
Yeah, so we're heading up to Kelowna for a work conference.
Yeah, you got the work.
We're going up on Sunday. I don't know if I mentioned it on the pod, but I'm bringing my wife, but somehow she invited her sister and mother. Yeah, so it's basically a girls' trip plus Alex. So we are watching the Super Bowl in Kelowna. We made reservations at a pub. Going to be decked out in Seahawks gear. It's my mother-in-law's first time ever to Kelowna. So we're going to do a little winery tour with her on Tuesday. And then when I'm at work, the ladies are going to do whatever thing. By the time I meet up with them, they're probably going to be drunk. So it'll be a good time by all. So by the time we get back, hopefully we're celebrating a Seahawks win.
I hope so, Alex. We'll either be in gear or we're just not going to talk about anything.
Oh, we'll talk about it, whether a win or loss. Yeah. So folks, thanks for tuning in. If you like this pod, please share it with your friends, family, other people who would enjoy what we talk about. So on behalf of Alex, I was going to say Alex Pang, but on behalf of Alex Shanks, I'm Alex Pang. Thanks for tuning in to episode 74 of the Canadian Mortgage Show. We will see you next time.
See you later. Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.